May profits be upon you. Welcome to another weekly market forecast. We're looking at Nasdaq, the Nasdaq 100, right? We'll be looking at the futures, the Nasdaq futures, which is basically the same. It's just that with the futures, everybody gets the exact same numbers as opposed to CFDs. But that's beside the point. You could use this chart to chart for the NASDAQ 100 for sure. Now, first thing I want to show on the monthly time frame is this hard break of structure to the upside. This is a break of structure, a BOS, and this automatically tells you once we get a strong close above it that we are bullish. All right. Technically, we are bullish. All right. Even when price took this dip down here during the April's tariff declarations by the Trump administration, and you saw the immediate recovery and the carryover, the carry through, the continuation to the upside, where we had another strong structure break just recently, this past month, the month that we're in, which we have 4 days to complete. Now, that just lets you know we are reaffirming that we are still bullish and the market is strong. The sentiment is risk on. All right. Now, what I want to point out to you is this little doohickey here, which is a bullish fair value gap. All right. Reason why it's dotted lined, the line is dotted, is because, so you can see it clearly, is because this candle hasn't closed yet. All right. But if it closes anywhere near up here, we're going to have a bullish fair value gap, which the market could use to push back down into, find support, and continue higher from. All right. So we are bullish on the monthly. All right. There's nothing bearish at all there. Okay. So if we come down to the weekly, what we have here is this weekly fair value gap here. All right. That is a weekly, sure enough, official weekly fair value gap. Okay. And the market could use it to go higher if it should make it back down to here. Oh, we have the opening candle. Okay. So we also want to make sure we acknowledge that we had a break above we closed well above the previous week, and we did so before that with the week prior as well. This is a very strong market. We have a lot of bullish momentum. We had earnings week. We had trade deals made with the Philippines and Japan. The tariff war tensions are easing, and that allows people to feel more confident putting their money into riskier assets like the stock market. All right. If we go to the daily, what do we see? This is where we beat that high. You see a grinding. You see these baby teeth. All right. The baby teeth. The market is grinding higher and higher. Look at that gap up. Look at that gap up for the week that is coming. All right. This is starting the new week. This is the open. And we are gapping up. Now, look for this gap to close if you're that kind of trader, to take a sell on the smaller time frames, the lower time frames, down to these to that opening to close that gap, because I'm pretty sure that's going to happen pretty soon, quick fast. All right. Now we also have a bullish fair value gap that was tested and price pushed away from, and this is what you want to see: a close above the previous high from the contact of a fair value gap. All right. It works the opposite, of course, so, in bearish situation, but in this bullish situation, you want to see price touch that fair value gap, and then you want to see the next candle open touching or taking that low, but closing above the high Why did I get so dramatic? Closing above the high of the previous candle, especially on a daily closing basis. This is a very bullish indicator. And you see price retraced the next day and then continued higher the day following that on Friday. All right, this is Monday's candle. So I am bullish. There is nothing to be looking, selling. There's nothing to say sell. Nothing. All right, you want to trade, be in front of confirmations and affirmations, and not affirmations, but uh, just you want to go against the analysis that you see and try to predict the markets. That's a bad recipe. All right, that's a bad recipe. Look at the 4 hour. The 4 hour. What do we see? We see bullish fair value gap. Price comes into that bullish fair value gap, closes above the previous highs. All right, after contact with the fair value gap, price retraces partially, respects the midpoint of that wick on that long the bullish candle and that long wick, and we continue higher, breaking the high of those previous highs there. You just got to read the market, and it will tell you what needs to happen. Okay, and I like it. I like it a lot. So we did get a positive close above that high there on the 4 hour, and we don't see anything that says start looking for shorts. All right. You want to take shorts? That's fine. I would wait for longs. I don't want to take longs from up here. Let's go back to the daily. I don't want to take longs from up high. All right. At the top of a move. I don't want to take highs. I don't want to take longs when prices are moving so high. I would like to wait for a pullback. All right. A pullback to a fair value gap would be the best situation. Now, we don't have that here. So I'm looking for lows. All right. I'm looking for lows. And these lows, you can expect price to find some support for higher prices. That's what I would be looking for. All right. Understand that NFP and FOMC on Wednesday and NFP on Friday. These are potential market movers, and that could bring price. We can see the positioning by the institutional players where they want to bring price back down to this fair value gap here, and that would suit me just fine. All right, I would love to take a high probability trade from there. All right, this just got to wait for the signature of price. Do you want to take shorts down into that? You can on the lower time frames, but we won't get into that right now. You can. All right, just wait for the breaks of structure. But for me, a high probability play is the longs, and if price wants to sweep these lows into this fair value gap, I would be looking for that to happen and take my buy from there. I hope you enjoyed this video. Make sure you hit the like button and boost button, and make sure you go and check out the analysis I've already put out for the euro, the pound, the US dollar JPY, the US dollar yen, and the S&P. And I will see you in the next video. Thank you for watching.